So we're just going to go over areas of interest, how to identify levels across different time frames, how to align those levels, and then how to use that to refine entries, to refine trades, and try to get the best entry. And I try not to focus on risk to reward, as kind of like subconsciously you tend to focus on the wrong things. That's what I tend to find. I try to focus on the probability of a move. Um, and areas of interest is a really nice way to find those probabilities. I'll just share my screen as well. Okay, so this approach, everything in this approach is all based off lots of different time frames. So I use every time frame. It can be a little confusing, but I'm trying to. Well, the key thing that you're trying to do in this approach is that you're trying to align different time frames. So you're trying to enter with like low time frame volume. Maybe that's a shift, like low time frame direction, with like a high time frame continuation and high time frame direction. So you're always trying to align low time frame with higher time frame. I like to kind of add in there's like a medium time frame. So it's not just low time frame, high time frame. Um, it's a range. So I would count low time frame as 1 minute and 5 minute. Medium time frames, you kind of have 15 minutes, 30 minutes, and we'll say the hour. So that's the medium time frames. And then high time frame, that looks like a 5. High time frame, you have 4 hour daily, and you have the weekly. So when you're scalping, ideally you want to have the low time frame and the middle time frame. If you're swing trading, this is more important. But this is still, you should still be aware of high time frame wise. So direction, that's counter behavior, that's market structure. We've covered this so many different times. Areas of interest are part of that counter behavior market structure. But you always want to keep in mind different time frames. So the overall structure. Okay. Whenever you're looking at my analysis or my charts here and here, you'll kind of see some thicker lines that are horizontal, and then you kind of see some rays here that are a bit thinner. So I use a horizontal ray for 15-30 minute hourly. I don't really do that on the 15 minute. I mainly use it for the 30 minute and the hourly. So for clarification on my charts. For the horizontal array, I use that for the daily, weekly, 4 hour. These are really big, strong levels on high time frame. So you have levels, and then you kind of have zones, areas of interest. With AOIs, with zones, you don't have to be the most accurate. It's just a broad area. With levels, that's kind of where more of the refinement comes in. You can get like cleaner, tighter entries, or more precise with the levels, but uh, zones is just like a general area where you're looking for a reaction to, and that can be around a level. So, in today's example, while I was doing analysis, you start off on the high time frames. So we go onto the daily here. If you have a what looks like a gap down. If it looks like a gap down on Oanda, or sometimes like brokerage charts tend to look a little bit different. But if you have a gap down, put the level at the close of the bullish candle. If it's the inverse, put it at the close of the bearish candle. If you go from bearish to bullish, put it at the close of the bearish. Bullish to bearish, put it at the close of the bullish. Because it gapped down. If you gap up, you put it at the close of the bearish. If that makes sense. Don't want to be too confusing with that. Because levels, you're always going to put a level at the open and the close when you go from bullish to bearish, bearish to bullish. Very simple, very easy. So, just some examples. You go from bearish to bullish at the open and the close of price. Simplifying that just at the bodies. Very simple, easy. Put at the bodies. Those are just levels. There. So I tend to, if price is around here, I tend to put just in a general range around price. I don't have to go into analyzing these levels here, because this is the first main level that you're looking to react to. And think of areas of interest or levels. You have these levels here. Price tends to be kind of like drawn towards them and then bounces off them. They're kind of like magnets. They might ping pong in between them. If you have a break, they might be drawn back to it and then a push off it. So if you kind of been moving bullish and you're expecting to continue bullish here, if you want to continue that, likely you're going to have something like that with like these areas of interest. So you can take a sell here for a counter trend trade, or you can be patient and wait for a buy when you have a pullback. So this can be helpful for identifying direction, for low time frame, high time frame, stacking different time frames. Remember, we're always talking about that push and the pull at price. It's always going to be a push and a pull. It loves to fill its moves. So if you're looking for a push and a pull, if you've had a big push and you're kind of in an area of interest, likely you're going to have a pullback to maybe a previous area of interest to have a continuation. So yeah. Areas of interest help with that direction, help with finding where you want to enter. So this is mainly about where you want to enter. Yeah. And okay, price has come into an area of interest. What are you kind of looking for? You're not just looking to sell as soon as price comes into that here without good reason. I've been testing some stuff recently, but in general, you're always looking for a reaction to an area of interest. So that can be the entry model. That can be the type 3 shift. It can be a high time frame type 1, where you have a bullish to a bearish candle close looking for an entry on that top hook being created. What this might look like on low time frame structure is you have a high, you break that high, you break that low, come back in, create that top wick on that type 3 pullback. That's probably the most perfect, easiest trade. So areas of interest are where you're looking to take an entry off. Here. Okay. So daily wise, you have a daily type 2. I'd put a level at that open, even though you kind of had a gap down, but just in general area of interest. If you're not sure, go down to the 4 hour to refine. So a lot of time levels will stack on top of each other. So you have this daily kind of area. You have a 4 hour level here. You have to be the most precise, but then you kind of have like these wicks here. So think of the anatomy of each candle. There's a high, low, open, close. One time frame of a candle is just low time frame structure simplified. So the low time frame you go, you're not seeing anything really different. You're just seeing more detail. So think of it as a TV. The lower time frame you go, the higher definition the TV will be. And sometimes there could be too much definition. There could be too much noise, so much like grain, too granular. So this is why going into high time frames can simplify price action, make it a little bit easier, because like in this 4-hour candle here, this is what I kind of call like an inside bar. It's an indecision. Nothing, price hasn't broken a low, hasn't broken a high. It's a very small range on this 4-hour candle. So for the 4 hours of this candle, you just ranged, didn't go anywhere. So I can tell it was a ranging period. Didn't break a low, didn't break a high, kind of low volume, just off that 4-hour candle. If I want more detail on that range, I can go down into the hourly and look at how that was here. So it's pretty clear a range. Yes, you're kind of breaking highs, lows, but it was very heavily range bound, mean reversion, and this tends to be more common pre-Tokyo Open. So the start of a new day. Around the start of the new day, like this is when you're going to have the lowest volume before Asia, after New York, before Asia. Why is that? A lot of people are exiting trades, exiting positions, because holding over the day, people might be charged swap fees or swap rates. Like if you hold a trade over a day, you get charged swap. So this is the lowest volume time. So it makes sense. Okay. And then going down onto the hourly, pretty clear here. We have a little range here. So you have a level here. You don't have to do all these individual levels. You don't really have to do that. It's not really much point. How do you know like which levels to take? I'd say step one is just to focus on what's clearest to you. So what is the clearest, cleanest level that just springs out from the chart to you. Step two is just to focus on the most recent. I tend to just focus on the most recent, even though levels tend to be respected for quite a while. Like if I go look at this level here, just draw it there, put a general area of interest. It's like a general area of interest, like 30-minute, that lines well, nice as well. You can go all the way to the left and that kind of aligns with that 30-minute level, but you don't really have to draw another level there because you're just trying to get a general area of interest. It doesn't have to be the most accurate. That kind of like accuracy around the entry comes down to recent price action when you're kind of looking for like that candle to close, a new level being like formed there where you can like get that like accuracy around that entry. You don't have to be the most perfect and do everything in the most detail from like a month ago. So focus on what's the clearest and what's the most recent. You don't have to do every single level. If there's a lot, just do a general zone or area of interest here as well. So hourly on the top of the range, you can do that and that, but I would just do the average, draw a zone, pretty easy here. Let's say you have kind of like two levels that are kind of like different as well. There's a couple of scenarios where this happens, but what you can do is draw two levels and then do a zone to connect them. So you're looking for around that as well. But yeah, a lot of the time you'll see like a high time frame 4-hour level. You have hourly 30-minute levels above and below. So like that would be like the general zone there where you're having that. And if you have any questions or want me to clarify anything, just jump in and let me know as always. But yeah. Okay. So for direction, being able to, also for areas of interest informing direction, most of the time, not always, it's characteristic. Think of like those levels as like a ping pong. So you're in a certain period, you're pretty bullish, you're looking for a pullback. When are you looking for that pullback? When you've reacted to that area of interest? When you're looking for a buy? When you reacted to that support or area of interest there? So I was looking. I missed a trade today. I was looking for a buy. You had a daily type 2, so kind of closed beyond structure. Overall structure was looking very bullish here, even though you did have for our bearish close, it was kind of indecision. Overall time frame is very clearly bullish. So I was looking for price to come react to at least in this area of interest first to create that daily bottom wick, have a bit of reaction, and then push bullish. Most of the time you get that. Today you got that, but I was looking for a bit of a bigger pullback, a bit of a bigger bottom wick being created on that day. And what kind of played out there. So as I said, I was looking for either short-term sells to create that bottom wick. So how did I find my direction based off that area of interest? Nice daily type 2, low time frame bearish, high time frame bullish. Looking for that hourly close beyond because you're in a bit of a range there. And DXY was a little bit bullish. You're kind of at highs and lows. And remember, so you're also looking using these areas of interest in the exact same way on DXY, and that will kind of help with that direction as well. Yeah. Always at small directions, always further refine, but general is better. Keep it simple with areas of interest. You have to go into the most amount of detail. So how long does the previous structure be valid? So you can look, there's no specific time frame. You can look all the way to the left and see kind of like this structure here, and then go back to it and use that. Like if you have nothing to the left, you just kind of want to find the most recent. So that's valid here, even though that's like a month ago, 2 months ago. But let's say if I'm like looking at price action here, am I really going to be looking at like this stuff, which we've broken through like multiple times? No, I'm kind of more focused on what's like immediately to the left. So that's this area of interest here. Yes, it might align with this, but it's just simple to just look at that, put a level there. So yeah, that's how I would kind of look at areas of interest. But if you're having a shift, I find like most of the time, like you're always kind of looking immediately to the left. Like let's say this is kind of like high time frame. If you have a shift here, like this might be a level. Where are you likely to like pull back to? Either depending on how big the break is, to this previous low. If it's a bit of like a smaller break, you might break and do something like that. So what does that look like? You have a previous level here. Look at that. Would I use all these individual levels like that? No, just stick to the one that sticks out cleanest, like the top, like there's a clear low, there's a clear high. If you can go on to like 4 hour, maybe it's a bit clearer, but yeah. That's the general thing. You don't want to overly overdo it. Just the most cleanest levels. And then you kind of look for the low time frame reactions off that. If it's high volume, you may not get a pullback. You might just have a breakthrough. You kind of do get a shift there, but it's just the general areas or the swings. Sometimes it won't respect that, sometimes it will. But yeah. I guess another example of that. So 30 minute, 15, yeah. Bless me. Sorry, I've been a bit sick. But that's like kind of the case for areas of interest. You kind of want to like stack them as well. So I'll get a good example up. Okay, this up. Okay, this kind of mainly was low time frame. Like sometimes volume would just go here. So this was on kind of like a low time frame. Continuation with like high time frame was very bearish, but if we just go onto the hourly here. So this was an hourly type 1. You have a bullish to bearish candle close. And you're looking for a sell in that top wick being formed in that first half of that candle. If you go down to the 30 minutes, you have a very strong bearish close here. And then the 15 minutes as well. But mainly, this is kind of like a 5 minute, 1 minute type 3 shift. So if you're looking for like a general like sell in an area of interest here, okay, if you have like a general continuation here, what that look like is in that you want to see like momentum shift. So you want the volume to be in your direction. This is kind of like a very clear indication of when to look for a sell is when you have a change of character, shift of structure. You're making high highs, high lows, and then you make a low, and then here. This is where you refine. So this is the general zone that you're looking for a sell, but where you're kind of looking for a sell in that zone. What this would look like on smaller low time frame structure, you might have that low or that high being formed. So you're refining this zone down into this area here. So now you're just looking for a sell in this zone instead of this whole actual big zone here. So you're looking for a pullback into that there. And what this might look like as well, sometimes depending on the type of setup, I find like really nice entries. I'll get that up actually. Really nice entries on like a 5 minute type 2, 15 minute type 1 or type 2. So I'll get that up. Okay. This is kind of low time frame. So you have a general area of interest here that you've kind of reacted to. You have a general area of interest. You're looking for a buy. It's not the cleanest, but you have this strong bullish close above this previous structure. So it's a pretty clear bullish type 2. Strong bullish close off this previous structure. And then you go down to that 1 minute where this would look like a shift. Where you're looking for a shift, as I kind of previously covered, you're looking for on the low time frame, that previous low that you made, that you then broke to the left, what that will look like, that will align with that 5 minute type 2 at that previous kind of 5 minute level. So you can look for that 1 minute area of interest, that structure, that low, with that 5 minute level counter behavior wise. So this is how you're kind of like refining. You're looking at high time frame levels, areas of interest, the exact same way that you're looking at 1 minute, 5 minute lows here. So my trading routine to find a trade, so I do kind of cover like areas of interest. So I just draw up my areas of interest. I'm looking for like that push and that pull, using like where we're going to push in between those like areas of interest, thinking of them as like magnets, you know, and using the exact same thing on DXY. I look at the charts like 10 to 15 minutes before I take a trade, so it only takes like 5 minutes to do this analysis. Uh, Even within the first minute, I kind of have my direction just from like intuition. So like purely intuition. Um, the more you, the more I kind of think, um, the worse I tend to trade. If that makes sense. So like I kind of trust my gut feeling and my subconscious, um, because you've like when you've repeated something over and over and over again for years, it becomes internalized. Like you've trained like a computer, I guess, like use your subconscious on a lot of data. But today, some days you're going to miss trades. So the reality is you're going to miss trades. You can never not miss trades. I missed a trade today, twice. So I was looking for a 30-minute type 2, similar to what we got yesterday, which I might cover. 30-minute type 2, creating that bottom wick in that first half of the candle on a pullback. But what did we get? We didn't really get much. Okay. This is where the 30-minute opened. You immediately went bullish. And when that happens, I am no longer looking for a trade. So I'm always looking for it to open. If it's like a type 2, I'm looking for it to create that bottom wick first and then have that push. Like if you have an open and then like react straight away, like okay, I'll just come back later. Um, but yeah, I was looking for an entry around this area of interest, which we didn't get. But price just continued. I think I'll cover yesterday's entry as well. Yeah, I'll cover yesterday's entry as well. I might like I've been cooking something up, new kind of entry model. So we're kind of like similar shit, I guess. It's just like subtle ways of looking at it. Okay, this was okay. This is a sell and a no. This is a two buys, one win, one loss, one win. Okay. They were kind of ranging here with a. Sure, this is also really easy way to align different time frames and not have to like jump across different charts. It's just to use this indicator, ICT high time frame candles by Fuddy. You can see the 1 minute, so the 5 minute, 15, 30-minute, all on the same chart. So pretty nice. Very nice. And so yeah. So if we're going to look at like 30-minute wise, you have like a level there. So you can draw that on the 30-minute. Look at that level. Oh, yeah. Okay. It's like a general level there. The area of interest. You can kind of align all these different things, different levels. So like you have open, close, open, close. That would be like a general zone that you're looking at there. But I took two trades. And you might see like a type 4 that I kind of like glossed over. I was looking for a buy to, as you had the previous close daily bearish to create that. We had a big move down as well. Okay. Structure wise, if you just look to the left, you have open, close, those kind of align. So that's like a general area of interest there. You kind of have like a higher time frame shift as well. You kind of made a low, broke a high, looking like pretty bullish on that. So you have that area of interest, then you have like a 30-minute close. You can kind of refine that into a level, and then you can go like adjust that with this kind of structure here. So I was looking for a buy. I think my buy was like around here, stuff below the low, and yeah, had some initial good volume, but then you kind of reacted to like see this open close, this wicks, this kind of structure, and then I closed for a small loss here, followed the low. The entry was a bit early, and I learnt my lesson. But then you had a pretty nice low being created here, and you might like this might look for look pretty bearish. You have kind of like a type 3 on the 1 minute. You have these like a what is that 15-minute type 2, but you always want to keep in mind overall high time frame direction. You're at this like previous like overall area of interest where you're looking for like this is where you can have a shift on the high time frame. So yeah, I wouldn't be looking for a sell on that. So I was looking for a buy, got stopped out a little bit, but I managed my trade pretty well here. And then you kind of have something like this, like where you kind of have. So I didn't take this trade. I've just been like looking at this sort of stuff. But you kind of have like something like that. I found like maybe like an entry on that is like really nice. Because like when you have something like this where you kind of like you're moving in a certain direction, then you have like I think if Wyckoff, anyone who knows Wyckoff, this kind of stuff, they'll call it like a spring, where you're looking to continue bearish, but you have a shift here where you're like you have a reaction, but volume comes in and you break this high. So something I've been looking at as another entry type, kind of similar to a shift, just a little bit more subtle. But I'll make this a bit clearer. So you kind of have this high, and then you have like a reaction to that high, and then you break here. And then you have volume come in. So yeah, pretty nice. I was looking, what was this, 12? My second trade was at that third hour of Asia session. You had a pretty nice push up. You would see like that as a bit of a shift, but you can also see this as a bit of shift. So you have a clear break of a low, break of a high. So there's always multiple different options for entry of market structure. There's always lots of different options. If you go to 30-minute wise, what that looks like, not too far. 30-minute, this is 12 o'clock. You have open, close, a general zone. So you kind of refined into that zone. You can set a stop loss below this level here, or if you want a bit high probability, you can do like that. And if you get on a 5-minute, you can always further refine as well. But this is looking pretty nice. You kind of have 1-minute structure stacked with that 30-minute. You can always refine down to like smaller 1-minute structure, but you kind of want to keep it simple. And you can put it below this 1-minute low time frame, little low, that swing there. So you create that bottom wick in that first half of that candle there. So that's like a really clean. You have a kind of like a high time frame, like a 5-minute shift. You have a 30-minute hourly type 2, 50-minute type 2, and you have the 4-hour flipping as well. So that's kind of what you want to see with that overall high time frame structure direction, that high time frame shift of structure where you're making a low, breaking a high. So you're taking this entry here with like the same entry model on high time frame structure to like inform your direction as well. So you always look to stack, tell a story, stack different time frames, and yeah, I can't remember what that was, but what my take profit was on that. But yeah, so yeah, I guess if that makes sense, you're kind of looking. You can use a type 1, type 2 for like a area of interest with that 1 minute shift of structure. So you're kind of looking for either like if it's a type 1 where you have like, sorry, it being like, let's just say this is a bullish candle, you go from bearish to bullish. You've created a really nice type 1. You're looking for a buy. Ideally what you want to see something like that. So something like, I'm smoking crack here. Something like that. So like you have the close here, the close, you've had a shift and you're looking for it to open, create that bottom wick for a type 1 to flip, or if like it's a type 2, something like this, like kind of messed up candle here. So like you're in a bit of a range, like you went from bearish to bearish, and then you have like a big bullish candle. Let's say you have something like that, big bullish candle. On the low time frame, you might kind of like be ranging. You might like have something like this where you're kind of like ranging, and then you might have like that. You might have like a little shift in here, then you might have like an overall like high time frame shift. You're looking for a pullback there using that level, or you can use that low time frame highs. So it's just like a simple simplification of that type of structure. So I guess we've covered direction in depth, and the main thing around that was stacking different time frames that direction. You're trying to enter a low time frame reversal, shifting from like if it's like you move like this, you're trying to enter like a low time frame reversal with like a high time frame continuation. You're trying to align that 1 minute, 5 minute with hourly, 30-minute, 4 hourly. And the bigger the time frames that you align it with, the longer or the better opportunity for you to hold that trade longer, because it'll go further. If you're taking a trade off like a daily type 2, potentially if you get a good buy on that, you can hold that for the rest of the day, or for 4 hours, 5 hours, 6 hours for the rest of the session. So if you're entering on a 4-hour type 2, you can hold that for the next couple of hours. Or an hour, you can hold that for 30 minutes, an hour, 2 hours, depending on structure as well. But yeah, so areas of interest, structures, levels, that's based off market structure, which is kind of like zones, and then you have levels, which is kind of like candle behavior, high time frame candle closes, opens and closes. So yeah. Okay. I don't really tend to enter on breakouts, just because, like, if I miss a trade and it's because I didn't take it on the breakout, I'm kind of fine with that. The markets are going to be there tomorrow, or I can come back a bit later. I like to enter on a breakout. Sorry, I like to enter on a pullback, as I tend to get better entries. So if you're like entering on a breakout of structure, like a breakout of this high here, I find like most of the time you're going to get a pullback. Like 70, 60, 70% of the time there's going to be a pullback. Very rarely you're just going to have a complete break and price just goes. But yeah, you might enter a buy at the break of this structure here. But I'd just rather wait for a pullback and look for a buy in there because I'm looking to trade with volume with that push and that pull. So I'm always looking to take um, a either sell when it's extended or a buy like just when it's overextended. Like I'm trying to buy. Let's say if we're moving bullish, this candle here, I'm always trying to buy below the open. If we're moving bearish, I'm always trying to sell above the open to create that top wick, to create that bottom wick, to have that push and that pull here. So I'm just a pullback trader. That's how I'm wired. You might be wired differently. You can use so you can use this as a breakout system. You can enter on a break of a low and you can just set a stop order. That will work. You just have to get good at that type of entry. I've gotten good at that kind of pullback. You can, here, I used to trade like this. When I first started trading, I used to trade like this. So I would, so if I've identified direction as bearish, instead of like trying to enter on the top wick above the open, I would set like a stop order or I'd look to enter a sell when this candle first created a top wick and then flipped and started moving bearish. So I create like put like a sell stop here, or a sell stop below this low here for like a breakout for trading with volume. But what I found was that this push would only be like 10 pips, barely, maybe 8 to 10 pips in an Asia session for me. Like, or I'd always have to sit through something like where like I would like enter a sell here at the break of this low here, but I'd always have to like sit through like a pullback to hit my take profit. That's nothing wrong with that, but what I really enjoy is like taking something like this, entering with volume, and like entering on a pullback and just like getting out in one move. So I like to be in and out in one move, and most of my best trades are just aiming for that. It could be impatience. It's just, I don't know, it's more enjoyable that way. And you want to trade in a way that's suited to you as a unique individual. So this is why I kind of like go through like you can use all these concepts, these things as just tools. Um, adapt it to who you are. Don't try to force anything. Um, I look at I look at every time frame I enter on the 1 minute. If the 1 minute is very noisy, it's confusing, it's too much, it's anxiety provoking, which it can be. Um, there's no problem with using the 15 minute, using the 5 minute. You can like unfavorite this. I used to just unfavorite because I used to 1 minute used to fuck me up bad. And I'll just focus on high time frame. But as I got better slowly, and as I understood more as my intuition developed, I added back in the 1 minute when I was ready. I had to remove it again because I kept on making mistakes, but because I thought I was ready, but I wasn't. But there's a lot of noise, but this is like a powerful tool, the 1 minute. But try not to get overly sucked into it. This is why this is a really good tool. It's kind of hard to get sucked into it when you're constantly seeing high time frames as well. So very nice. And like even just going in like replay and seeing how like low time frame market structure reacts to like high time frame candle behavior, like um, when you if you're like waiting for like the high time frame candle to close, um, and like seeing how that affects each part of the day, different volume, and if you're at an area of interest, all that sort of stuff. Um, this is just good, like good learning to see like how 1 minute structure connects to high time frame counter behavior, all that sort of stuff. Um, like you might have a bit of shifts, might be waiting for like a high time frame candle close, like a 1 minute, like a type 1. We have a shift with a high time frame type 1 for like a pullback. Um, like, yeah. I'd say like most of the time the best trades you want to see like a something on the 1 minute. It could be, or the 5 minute, like it could be a type 3, it could be 5 minute type 2 with like a high time frame candle close in your favor, just to connect different time frames. In general, you want to see 4, 5, or the majority of time frames looking in your favor. And when I take losses, it's because I've forgotten that and I've made a mistake and I'm trying to take a sell when the 1 minute and the 5 minute are bearish, but everything else is bullish. Because I make mistakes as well. Even though, because I'm human, you're gonna make mistakes. Yeah, where can I find this tool? If you go onto indicators and then search up SCT high time frame by Fadi. And yeah. Okay. So hopefully this like kind of helped with trying to understand how I identify or use areas of interest levels to refine and take entries. It's if you're just starting off, you're new to this approach, and it's confusing, and you're not sure, and like yes, I've kind of like spoken a lot, but hasn't really made sense. That's how it's supposed to feel because you're learning something new, complex. It's like yeah, the kind of question like you're not going to get a highly profitable system without a lot of effort. And as I always say, intuition is what is the magic that brings it all together. So you need that intuition, that gut feeling, and you can only get that through time, chart time, experience, putting in a lot of trades. So yeah, I hope you guys have a good rest of the week. Today was kind of mid for me in the Asia session. I was looking for a buy, but the pullback never came. But those days happen. Not every day will be perfect. Last week was really good. Like 3 days in a row, I was taking this exact same trade. This week, similar sort of thing. You're always adapting, but sometimes it just doesn't play out. So it's always good to keep in mind that longer time frame. In the grand scheme of things, there's 1 day matter. Keep in mind what happened last week, all that sort of stuff. That awareness. But yeah, I hope this helped. If you have any suggestions or if you have any questions, want feedback on your own areas of interest, just pop a question in the chat. Any of the chats. Always happy to kind of clarify this as it helps me out improve as well. Which time to trade? If you're able to trade in Asia, I trade the second hour. If you're able to trade New York, you can trade the second or the third. Or if you want to take a breakout, lots of volume, you can trade the first. New York, I have no experience because I'm based in Sydney. But you can trade at any time. You just need to be consistent and practice at that time. Trading Asia session, trading London, trading New York, they're all unique skills. They all have different characteristics. The longer you trade the same at that same time, the better you get at it. So my recommendation is trade the same pair at the same time every single day, and you'll start to see shit. That's what I did. But yeah, I haven't tried trading crypto. Um, so yeah, you can trade your stop loss on well, I trade it on low time frame structure. I don't really move it to break even. So if I like taking a sell here, stop above the high, and it's in profit, you've broken this low. When we break this low, I'll trail it to like above this high. Even though I can move it to break even, I wouldn't because I'm not trading my account balance. I'm trading market structure. So I'll put it above this high because like if you have a break of a low, break of a high, that's the inverse of what you want to see because you're entering on the shift. You don't want a shift against you. So that's how I kind of like trail my stop loss. And you can kind of like trail it on like this high and then this high. Um, I guess I'm always kind of like worried about taking a entry on a breakout on a reversal, um, because like it's kind of like small moves. Like high time frame wise, you are bullish. Um, yes, like you're kind of having a shift on DXY, but it's kind of rangy, bit nasty. Um, I would. I'm a pullback trader. I would always wait for a pullback. Maybe waiting for like that 50 minutes. It's like you're entering a sell. Like if you're entering a sell around that, like around the 50-minute, new 50-minute candle opening, I'd always like really like wait a little bit just for like it to open for it to like create a top wick first. Um, but I don't know, it's not the best entry. If you're looking for like a correction of like this move here, that's valid. Um, it's just yeah, it's a bit tough. I think that sell's a bit tough. Um, Today's been a bit tough for sales. I have a sell bias. It was kind of hard for me. But DXY is looking in your favor. I'll just say it's counter trend and you've like taking it at a break. I'm not a breakout trader. Um, but the stop loss is good. You can add this like low time frame area of interest. So that's a bit of a tough sell. You're kind of like asking a lot from that. That's more of you do have like a low time frame. Let's see what you say. You have a low time frame shift here. Um, but like keep in context if you're looking for like a big correction of like this move here off like a little low time frame shift, that's really hard um, to get. So like ideally, where am I? Ideally, you want to see a bigger shift. So instead of this kind of like smaller smaller shift here, you want to see like a bigger one, like something like that, and then refine down to something like that. Because you're trying to take like a really big high time frame move that's like against overall trend. So you want added confirmation or like a big clear shift. That's yeah, kind of a hard sell. Yeah. Yeah, it's ballsy. I mean like it's not bad. It's like you need this to learn. So um that's just a good learning. Yeah. Um every loss is a learning. I've taken hundreds of trades that turned out like losses. That's how you get there. Like the quickest way to learn is just to make the most mistakes. So that's yeah, always a positive. This is a nice clear shift. You have a break of a low, break of a high. Um, So if you're kind of looking, it's kind of example. If you're looking for like a sell that's gonna last hours or like half a day, like a big move, like think of like how long this was like 5 hours. If you're looking for a sell, like take profit is around like that 5 hour move. You'd ideally want that shift to be like at least a couple of hours, like an hour or two. So you want like it to be a bigger shift. That's like how I kind of, I guess, yeah. It kind of helps me clarify as well because I also make the same mistake, looking for too small of a shift on too big of a move, which is what I did yesterday. I should have waited for a bigger shift. So I made the exact same mistake. Um, yeah. Good take pro. Good stop loss placement. It's yeah, that's um, if you held that, that's really good range. I wouldn't have held that. I would have exited early. Tried my stop loss, probably got stopped out for a small loss. Um, but that's pretty good. I guess you're taking that sell in that was end of New York. So if you just think about timing, um, you're kind of like taking a like big correction in a period of time where it's going to be a bit low volume, a bit later on in the day. So that's like the only thing kind of like makes sense why that took so long to fill that move. It's because you kind of took it in a lower volume period of time. That's a really nice entry. Sometimes it might just go hit profit take away. That's so yeah. Yeah, two losses today. I guess you're looking for sales. Yeah, I can trade live sometime. I do tend to be a bit focused when I trade, but yeah, this is a clear shift. I guess kind of going back to that like overall direction. That's a really clear, clean type three. Yeah, but if you were to like look at um, like kind of like high time frame direction, like hourly or hour, you kind of broke that high. Daily's looking kind of bullish. Um, it's unlucky. It's like a really nice shift. It's just like against overall direction. So that would be like the only reason. But DXY was kind of fucking around today. DXY was kind of being a bit. I would have, if I wasn't looking at buy and I was looking for a sell, I would have taken the exact same trade and gotten stopped out based on how DXY was looking. So it's not a bad trade. Um, I'd be happy taking that loss and just like journal it and learn from it. Um, but yeah. Anyway, so I'm a bit sick. I'm gonna hop off. I hope you guys have a great rest of the week. I'll see you guys on. I'll be posting my analysis. I'll see you guys on Friday for some in-depth journaling, data, um, collection, refinement, all that sort of stuff. I'm um, gonna keep investigating some new sort of entry types. I might update this mind map as well. But as always, feedback, suggestions, let me know. Always happy to learn and teach. Lots of fun. Yeah, have a good one too, John. I'll see you guys Asia session tomorrow as always. I might do live session as well. See if that works out. And I'm from Sydney. I used to be in Canberra. But yeah. But yeah. I'll see you guys later.